Yeah, I think that the beauty is you can protect yourself from all of this, in my humble opinion, with very little Bitcoin today.
Really?
Now, yeah, in 4 years
How
from
little?
now, or I would say 2%.
Really?
I think if you had a 2% position, whatever your current net worth is, it will protect that net worth today. If you had a 2% Bitcoin position, maybe even 1% position, yeah.
What if you have 50% or more?
Well, then whatever your net worth is will probably be 50 times higher on the other side of this.
Okay.
Just to kind of give you an idea. So like if your net worth is, $100,000 and you're protecting that $100,000 with a 1 or 2% position, then I think that the $100,000 of buying power will be protected on the other side. Okay. If you have 50% Bitcoin, we'll just 50x that number of
Bitcoin is the key to securing one's future. Seasoned entrepreneur, investor, and financial educator, Preston Pysh swears by it. According to Pysh, allocating even a small percentage, specifically 1 to 2% of one's net worth to Bitcoin, can protect against economic uncertainties. So if one's net worth is $100,000 and they allocate 1 to 2% to Bitcoin, that $100,000 in buying power could potentially be protected on the other side of market volatility. Pysh also underscores the proportional impact, explaining that a higher Bitcoin percentage, such as 50% or more, could significantly magnify gains or losses in response to market fluctuations. This financial insight is important right now, and many famous financial experts feel the same way. Here is why. On January 10th, the SEC approved the first ever spot Bitcoin exchange-traded funds, and these ETFs simplify the process of buying and selling Bitcoin, making it accessible to almost anyone. As a result, these new Bitcoin ETFs could change the world of crypto investing forever. But there's one thing that they will not change: the need for a long-term buy and hold strategy when investing in Bitcoin. As Pysh reveals what he sees as the rocket fuel for Bitcoin's upward movement, he explains that Bitcoin's supply is being reduced by long-term holders who consistently accumulate more during price downturns. Unlike gold, where increased prices prompt a flood of supply, Bitcoin's scarcity, coupled with the difficulty of adjustment, makes it distinct. Bitcoiners who understand these dynamics are buying as much as they can with their earnings, removing the supply from the market, and eventually skyrocketing its value. We will now show you clips from Preston Pysh's discussion with Natalie Brunell as he elaborates more about this. As we do, please take a moment to give this video a thumbs up, subscribe to the channel, and enable post notifications for similar content. Feel free to share your thoughts in the comments below. Your engagement greatly supports the YouTube algorithm and significantly contributes to the channel's development. Thank you, and we hope you enjoy the video.
The question about like what's going to be the rocket fuel. What I think is lost on a lot is the rocket fuel has already been loaded into the Bitcoin system, and how it gets loaded into the system is through the hodlers of last resort that just kept stacking more over the past 2 years. So as the price is going down, these hodlers that are so convicted into Bitcoin just keep gobbling up more and more and more as that price went down to, how low did we go? Like 15,000 or somewhere in that range, right? People, you saw posts at those moments in time saying, this is it, this thing's dead. Literally the European Central Bank came out and said, this is it, Bitcoin's over, when it was around 15, 16,000 or something like that. But that conviction and that continual stacking of Bitcoin onto the balance sheet of net producers, people that are actually earning money and creating value in society and exchanging that value that they created for these monetary units that they're then putting on their balance sheet to never come back on the market again. That is what makes it go up in these bull runs. And so that's the first part. That's the rocket fuel. The second part is all the additional participants that are starting to see the contrast of the decay of the fiat units in contrast to Bitcoin that are now showing up. And once that price starts to run, what happens is a bunch of speculators step into the market. They might not be here for the long-term value prop, but what they do is they recognize momentum. And so they come into the market because they're like, oh, like Bitcoin has everybody's attention because Bitcoin's up, what, 150% in the last year? That will get a speculator's attention really fast, okay? Now, if it goes another 150 in the coming year, let me tell you, it really has their attention. And so what you're doing is you're attracting in a set of investors that are, I don't even call them investors, they're speculators that get sucked into the move. And then what happens to some of these speculators is they then become investors because they figure out what they actually own. Because the whole time that it's going up in these crazy runs, they're saying, what is this? What is this thing? And curiosity can sometimes, especially, and there's nothing more curious than Bitcoin. There really isn't on the planet.
Yeah.
Like, how can this thing that is this imaginary, made up, nothing unit, at least that's how the speculator would see it, is that there's nothing behind this. Why did these people keep on buying this thing? I'm making so much money speculatively, like owning this for the next 6 months. Like, this is crazy. What is it? And then they start doing homework. And then they start learning that it's not just some, made up Mario coin on the internet, and that there's like encrypted energy that's securing this thing, and it's distributed all over the planet, and all the stuff that we talk about all the time. That's what happens to the speculators. And if you keep 20-30% of those speculators that came in just for price action, this is what sets the next floor of people in the next bear market that don't leave.
As Bitcoin's price gains attention, speculators join in for short-term gains. Some of these speculators eventually become long-term investors as they delve into understanding the fundamental value proposition of Bitcoin. The continuous influx of new participants, including those converting from speculators to investors, contributes to setting a new floor for the market, even during bear markets. Pysh asserts that if you had a portfolio with 2% exposure to Bitcoin and 98% in cash over any 4-year period, it would have outperformed the S&P 500. A stock market index that measures the performance of 500 of the largest publicly traded companies in the United States. But beyond Bitcoin, Pysh advocates for a diversified portfolio that includes high-quality equities with competitive advantages and the ability to generate free cash flows. He predicts that even if Bitcoin doesn't fully succeed, these equities would outperform traditional fixed income as legacy systems or traditional monetary systems transition. Let's now take a look at more clips of Preston Pysh as he explains his insights.
Yeah, so Bitcoin operates in 4-year cycles for the most part. When you look at the peaks and the troughs, I don't think that it's ironic that they kind of correlate over any type of 4-year period because of the 4-year halving cycle is what I think has driven it, at least in the past decade. Whether that continues to be true in the future or not, I don't know. But if you literally pluck any 4-year period you want out of the price action on Bitcoin, and you would have had 2% exposure in a portfolio that was made up of 98% cash, 2% Bitcoin, it would have outperformed the S&P 500 over that same 4-year period of time.
Amazing.
And you can pick the 4-year period. And people that hear that are just like, "There's no way." Well, go do the math. See what you come up with. I think you'll find that it's pretty dang accurate.
That's amazing.
I think that that's something that people that are being good fiduciaries moving forward, now that they have access to Bitcoin's performance, I think that you're in breach of your fiduciary duties if you don't have some type of exposure or at least understanding as to what it is and what it offers. What else do you put into that portfolio, though, was really your question.
Yeah.
And going back to what I was saying earlier, so as this legacy system demonetizes itself and it flows into a new system, let's say you're just completely wrong about Bitcoin. What I don't think you'll be completely wrong about is that equities will perform in the legacy monetary units, in that legacy monetary unit, but it's not going to even come close to the replacement monetary unit's performance. But relative to that equity that actually generates free cash flows, it's going to way outperform fixed income, massively outperform fixed income. And so that's what I would recommend, is that you own high quality equity that has some type of competitive moat in any type of environmental setting that actually kicks off profits. That's where I would focus the rest of whatever your buying power is, and I would just dollar cost average into it. It's going to be all over the place because as the fiat melts down, it's going to be throwing violent fits.
Yeah.
Going back to the athlete, that athlete would be throwing violent fits as it's being pumped with these narcotics.
Yep.
That will be represented in the price of everything in fiat terms. It is going to be violent.
From what Pysh has said, it appears that wise investors include Bitcoin in their investment portfolios to add variety, taking advantage of its minimal connection to traditional financial assets. However, it's important to be careful and conduct thorough research because of Bitcoin's natural tendency for significant price changes. Bitcoin's market value can be very unpredictable, making it a risky investment choice. As of making this video, the price of Bitcoin hovers around $42,000. Seasoned analysts like James Lavish anticipate a potential dip in Bitcoin's price to around $30,000 before it surges to new record highs. Mark Yusko from Morgan Creek Capital Management suggests that Bitcoin reaching a 6-digit value could happen sooner than expected. On the other hand, Kathy Wood of ARK Invest envisions Bitcoin reaching anywhere from $640,000 to $1.5 million by 2030, emphasizing a longer-term perspective. Do you believe these analysts are making sound predictions, or do you think their outlook is overly optimistic? And how would you navigate the risks and rewards of including Bitcoin in your investment portfolio? Share your insights in the comments below. If you found this video informative, give it a thumbs up, subscribe to our channel, and turn on post notifications for more content like this. Remember, your engagement in the comments section contributes to a vibrant community and helps us bring you valuable insights. Stay informed, stay engaged, and thank you for being part of our community. We look forward to bringing you more content in the future.